Making tax digital. So you probably heard about this in the news. It's all over the Facebook groups. What is it, and do you need to be concerned about it? So welcome back to the YouTube video, guys. My name is Joshua Thirlby. I'm a chartered tax advisor, founder of JSM Partners in the UK, property specialist and high net worth accountants and tax advisors. And we're hearing a lot of clients at the minute asking us about making tax digital. Is it something they need to be worried about? There's a lot of scaremongering and a lot of misunderstanding about how it actually applies and what needs to happen. So we'll talk about making tax digital to start with. Well, it's actually already here for VAT. And essentially, it just means that you need to submit information to HMRC with digital records, digital software. They want to be able to see the link between where it's gone in terms of kind of invoices, bank statements, bank feeds, accounting software. They need to be able to have some kind of physical, or not physical, but some kind of tangible digital record that they can verify the source of the transactions. Historically, with income tax to do with VAT, a lot of things were paper, a lot of things were done manually, and HMRC don't like this because where things are done manually, well, actually, it's a lot easier for fraud, it's a lot easier for error. And that's the whole point of making tax digital, is to try and reduce tax fraud, make sure that it's easy for them to audit and verify what's gone into the numbers, because it can all be tied back to something which is a digital source rather than a manual source, because obviously it's a lot harder to fraudulently put digital sources together. I should have paused the video right here to say that if you haven't subscribed yet, please do smash that subscribe button below, because I want to get more subscribers, to be honest, but for you should actually benefit from this content. This type of tax saving content, you're never going to know about it unless you ask your accountant, and your accountant's not going to take the time for all the hours of content that we post here to inform you on absolutely every detail. So if you do want to pay less in tax, smash that subscribe button now and get notified as soon as we post a brand new video each and every week. Back to the video. So making tax digital is coming in for income tax from the 6th of April 2026. At the time of recording this, it's probably about 9 months away. 9 months until making tax digital, and it's being introduced in stages, and they're basically doing this by your total qualifying income. So for this first tranche coming in April 2026, you will be required to submit making tax digital returns if your total income, not including kind of salaries and dividends, but your total mostly self-employed profits and property income, is more than £50,000. And then from 2027, if it's more than £30,000, and then from 2028, if it's more than £20,000. So actually, over the next couple of years, most people will be caught by this making tax digital requirement. And essentially, it's almost like 5 tax returns a year. It's absolutely overkill. I can kind of see why HMRC want it to happen, but it's one of those things that probably shouldn't happen. Of course, there's always tax fraud or whatever it might be, but this isn't necessarily the right answer to the problem. It's not the right solution here. Putting this amount of administrative burden and extra cost on small property investors, small business owners, it's definitely not the right thing to do. But unfortunately, HMRC don't really care what we think and what is actually right by the customers, as they like to call it in the HMRC offices. They just do what works for them, make it law, and if you don't comply, you get penalised. So it's effectively 5 tax returns a year, and the way it's going to be broken down is to 4 making tax digital submissions. So that'll be a quarterly submission, and it's got to be done using digital accountancy software. So if you already are using some kind of software such as Xero, QuickBooks, Sage, that will probably do the job. I know a lot of those guys are working and have got trials already in place. So do make sure that you do have some kind of digital software ready for this. We're helping a lot of our clients where they've got large property portfolios, but to be honest, a lot of these guys are, they're old dogs. They've been in the business a while, and they do keep digital records. They do keep paper transactions. They don't want to use software. They've been doing it this way for the past 20 or 30 years. They're happy and it works for them. But unfortunately, HMRC don't care about this, and they want it on digital software. So we're now undergoing a digitalization process of actually showing them how to be using it as Xero or Hammock or Sage for their business, getting the bank feeds set up so that there's a bank statements are being imported, how to reconcile it, and ultimately making sure that they've got digital accounting records that are going to be suitable for HMRC and making tax digital. And what it'll be is those 4 submissions throughout the year. And it's important to note that HMRC have said they're not kind of pressing the accuracy of these 4 submissions. So it will literally just be some random figures that go in. Of course, they should be accurate as possible. And I'm sure over time, if there are large discrepancies between your year-end figures and your final submission and your quarterly submissions, HMRC will take gripe with that and probably issue some kind of penalties and underpayments for their accuracy. But at the minute, that's not what they're focused on. They're just trying to get mass compliance into this quarterly reporting system, which is the 4 over the year, and then actually issue still your year-end tax return at the end of the year. So really, there's 4 tax returns going in, no benefit to you, not much benefit to HMRC, there's no extra tax being paid, but then you've still got to do your year-end tax return at the end of the year. I think what they're trying to do is they are trying to almost get rid of the year-end tax return for a lot of businesses and have it quarterly. So they might be looking at phasing out the self-assessment tax return at some point in the, I'd say, pretty distant future, because things like this, it's going to take a lot of time. There's going to be a lot of issues, a lot of kind of backlog at HMRC to get things done right. So for the time being, it is a very long, strenuous process for business owners and property investors. My advice to you now is, if you do fall under this, you do have self-employed income, you do have property income profit over 50, 30 or 20,000, then make sure that you get set up with digital software that's Making Tax Digital compatible, get set up ahead of time, and then speak to your accountant about what the action plan is. A lot of clients where they're happy doing their own bookkeeping, they're just going to look after their own Making Tax Digital returns for the time being. We'll still help them with their year-end return, or for some of our other clients who just don't want anything to do with it, we'll be looking after it all, which of course for a lot of businesses is extra compliance costs as accountants have more work to do. So there we have it, guys. Making Tax Digital is coming in. It's unfortunate, and it's only going to get wider in terms of the remit. They're looking at bringing it in for corporation tax as well. Basically, more compliance for business owners, for property investors in the UK. Extra legislation to stay on top of, but it's here and we need to be prepared for it. So do get set up, do speak to your accountant, and don't fall short and potentially get any late filing or registration penalties for Making Tax Digital. As always, guys, I hope you find this video useful. Please do smash that thumbs up button and that subscribe button below. Until now, see you next week.